Good morning. Today is July 1st, 2025. The year's half over, group, and it sure went fast. I'm Joe Terril, president of Terril and Company, private wealth managers in St. Louis, Missouri, with now about $885 million in discretionary assets under management. And I thought today maybe we could just have a roundtable discussion about where the markets were in the first months of the year and where we think they may go in the next 6 months of the year. It certainly has not been boring. I'll start a little bit, with the fact that it amazes me personally how the market just continues to discount any bad news of any kind that you would think would give the markets hesitation. They don't. The markets were up, and then they took a beating. Now they've come back to regain all their losses for the year. Phenomenal volatility.
Shocking, actually. I'm trying to understand what is rising, making these markets rise. I'm in disbelief.
I just got back from a week in Chicago attending an industrial conference, and it surprised me how broad the AI theme was with these industrial companies as the AI build expands, and then also the anticipation of the benefits that they believe it will.
Well, it's going to have to benefit somebody, as we know, because we circulated it within the office for everyone to read. Yesterday, Barron's had an article about how far stock prices have gotten ahead of earnings expectations. Bill, I think you and I were, and I asked you to confirm it for me. At the beginning of the year, most expectations were for flat to slightly higher earnings. Now the markets seem to have built in somehow that we're going to have 10-15% earnings growth.
Right.
Stock prices are reflecting that.
Well, at the beginning of the year, there was an expectation of a recession, right?
Right.
And now that's gone.
Right. I think when you look at what the market's doing now, we're seeing investors take more risk, right? We've seen more speculative stocks start to outperform. Valuations are really stretched by almost every measure you want to look at. Valuations are high in the stock market. Can this go on? Yes, but at some point we need to take a step back and see, what are the factors driving these? Can they continue? Because right now the market's ignoring huge deficits, missiles being lobbed all across the Middle East, inflation and tariffs. So right now the market doesn't seem to care about anything other than taking on more risk. It's using 0-day to expiration options, which are basically a coin toss. So a lot of speculation in the markets right now.
Also, isn't that going to lead to more individual security volatility if somebody comes up with positive news or negative news? These stocks will.
Well, I think we see that all the time, Tricia. Yeah. You and I were talking about it recently, that a stock that was up 10 or 12 points and another one down 15 points on news that truthfully over a period of time fundamentally isn't going to make any difference in that company. But this is the way people are jumping from one thing to another. They're even doing the same thing, I think, in the interest rate environment.
Well, actually, Joe, back to your point, supporting exactly what you said. If you look at the triple Q, the NASDAQ 100 ETF, so the top 100 stocks in the NASDAQ, for the quarter, it was up 27%. For the quarter, you don't see that very often. Secondly, I think the other
But now it only brings it back for the year up somewhere in the vicinity of 5% for the year.
You're exactly right. So volatility. But it also goes to the point, if you look at the sectors, David, you were touching on AI. Industrials has been one of the better performing sectors year to date. Actually, the top performing sector, AI related. Next, which again, going back to the triple Q, is communication services. Well, let's talk about that for 30 seconds. What's in communication services? Netflix, Meta, Google, those sniff Mag 7 type stocks.
Well,
to me,
there's
so.
no question
Yeah.
that the big comeback in the market, as you're pointing out, 50% of it has been driven by just those 7 stocks.
But-
Right.
How much longer
But-
can people run those stocks? Again, I'm older and I like to think wiser.
But isn't
I've
it,
seen this act before where people run these stocks and they run them and they run them because they're the greatest thing ever, and ultimately something happens to
Well,
put an end
Joe,
to it that
isn't-
ends ugly.
in a bear market, isn't it normal to have quick, violent moves higher in the markets?
You do see that, and I think, Joe, you're touching on a good point, and we've talked about it as a team. This kind of reminds me of the late 1990s period leading into 2000 to 2002 period. Now, are we going to have that? We don't know, but it's something we're watching. And yes, David, you're right. Usually bear market rallies are much stronger than bull market rallies. I think the one thing that we've done a nice job at is, even with all the volatility, even with kind of returns really getting accelerated here in the last part of the quarter by lower oil prices, lower interest rates, anything the administration can throw to get the market up, they are, right? But I think if I'm an investor, you know what the question I'm asking us? What have you done for us lately?
Well, that's the way it always is. We have had, for the benefit of our viewers, we've had excellent first half performance. We've been very risk adverse, and we're still up 5 to 6%.
Keeping up with the indexes.
Well, yeah, the indexes, if you're 100% in stocks and volatile stocks, and you've been on a wild roller coaster ride,
Up and down.
you're up 5%. We're up 5% to 6%, and we have
Exactly.
not done that, I like to say, because of our discipline and how we always take the approach of, let's talk about the risk first. So in the time frame we have remaining for this, Tricia, you and I are in the same camp of just mesmerized by how much risk these markets seem to be willing to take, and how they just ignore everything other than, gosh, am I going to make money this week?
Yeah, it's very
People
short-sighted.
thinking year to year or et cetera, as we do, and thinking longer term. It doesn't seem like anybody does that now. They've got an algorithm computer program, and
Not what I
it
thought, yeah.
floors me.
Me as well. You know,
Well,
I'm amazed that-
there's a different, there's a lot of ways to make money in the investment world, but there's a difference between investing, trading, and speculation. And investing is very thoughtful with a goal in mind, and that's what we do. Where trading and speculation is very short-sighted, very very limited time frame, and.
And I think the upcoming earnings season, Joe, is going to be very important, right? What we hear, listen to from companies on their earnings calls, I think for the third quarter, we talked about it on the last video. We felt that the markets would be strong into this July 4th season. That's been accurate. I think the volatility is really going to pick up here in the third quarter. Yes, we're going to pass a big, beautiful bill, it looks like. Yes, we have lower oil prices. Yes, we have lower interest rates. But I think the third quarter earnings are going to be something very key that we're going to be watching on behalf of clients.
Bill, we've owned things for 2 to 3 years that are at all-time high prices. I think we ought to be selling some more things. With prices at record highs, you want to be a seller, not a buyer. And I know it's a difficult thing to do, and you and I
Right.
chatted a little bit about this. We gonna do it?
Well, I think, yes, is probably what we'll end up doing, because we are veterans in the business. We've been around a long time. We've seen things not exactly like this current market, but reminiscent of what's going on in this current market. So speculation is higher, risk is increasing, valuations are stretched. So we know that even though we may like a story and a current stock that we own, if our valuation discipline, really kind of mandates us to make a move, we'll begin trimming positions and taking gains. And all the while, we've been meeting with companies and talking with companies that look attractive, and so we're doing our work there. So really, as David mentioned, it's about the process. Right, there are investors, there are traders, there are pure speculators, and we know one discipline, and so that's what we'll continue to practice.
Well, and it has worked for us as I say, for the last 5-6 years in particular. It's worked for us to ignore the short term, ignore the trading, the speculating, and be an investor. And it's worked very well for us, and we'll continue that. This Thursday, because Friday's the 4th of July, there is 4 or 5 important economic releases about the economy. We continue to feel the economy is going to be strong, and interest rate cuts are already built into this market. No one's going to get excited when they happen because they're already expected. And we will see if these markets can continue to march higher, regardless of what fundamental news is out there, and continue to march higher on, which is a lot of speculation going on right now. It can go on, as we all know, for a longer period of time, but ultimately, when it ends badly. And that's the first job we have to have, is protect principal and make good gains, and we'll continue to do that. But Brian Curtis, our director here, and helping us make these little video casts, thank you. And
have a great
we'll
4th.
be back. Yeah, everyone have a wonderful 4th of July. And we'll be back maybe in 2 weeks, 3 weeks with updates, particularly because it'll be earnings season, to see how corporate earnings are coming in. Thanks for joining us today.